Now, like Gijriji said, right? I mean, there are various ways by which one can get funding. There are formal sources, there are informal sources. I think informal sources, most of us know that it can be friends, family. It can be like, for example, in your example, the friend of yours might reach out to somebody who is financially well-to-do and might ask him saying that, okay, why don't you partner with me? With me? You give money, I will put in the effort. So it is like a basically equity partner. That is also option. Or you can use your own savings. You can ask your near dear ones, friends, and all that. You can borrow from them. Those are all informal sources. Formal sources, like Ijreji said, there are various kind of financial institutions. So RBI is the regulatory body. Under that, they have various kind of financial institutions with a specific charter. For example, there are banks. In banks also, there are various different kind of categories. There are general banks, or there are small business banks, there are cooperative banks, there are district commercial banks. They're all licenses exist because RBI expect them to cater to a particular set of customers or a particular geography, so that there is a financial service available across the length and breadth of the country, right? That is RBI's objective. Now, similarly, to meet that and further that objective, we have these non-banking financial companies as well. The difference between non-banking financial companies and banks is that most of the NBFCs, they cannot take deposits. Okay. Versus bank can take deposits, right? You can put your FD, and that is what bank uses to lend forward. In NBFCs, we don't get deposits. We have to borrow the money from market. So there are various ways by which I can borrow the money. I can borrow the money from banks, like any of you, or we can borrow the money from individuals through non-convertible debentures, CCDs. There are some other kind of instruments. Okay.